If Bernal Heights looks practical on the surface, the parcel data makes it more interesting. On more than half of the lots, the land worth more than the building. That's not just a neighborhood story, it is an underwriting story. From here, my AI team takes over to show what buyers are really paying for.
Bernal Heights is the kind of place that looks modest, right up until the data starts talking. On the surface, it reads like a low-rise San Francisco neighborhood, with older homes, compact lots, and just enough slope to keep your calves involved. In the property file, that impression holds. Nearly 72% of the housing stock is single-family. About 19% is multifamily. About 9% is condominium. Vacant land is barely there at all. So Bernal is not secretly a condominium district wearing sensible shoes. It is a ground-connected neighborhood first, and the numbers are clear about that. Then the age profile shows up, and Bernal gets even more specific. The median build year is 1918. More than 75% of the stock was built before 1950. Only 3.9% was built after 2000. This is old housing stock, compact hillside geometry, and a neighborhood that has mostly remained itself. Andrew has the physical and financial structure.
The physical form matches that story. Median building area is about 1,400 square feet. Median single-family lot size is 1,751 square feet. This is not a large lot market. It is a compact, older, low-rise housing market with constrained replacement potential. The value layer underneath it is unusually revealing. Median assessed value across Bernal Heights is about $746,000. Median confirmed sale price is $1,530,000. That spread is Proposition 13 sitting directly on top of the neighborhood and refusing to move. The land data makes it concrete. Median assessed land value is about $409,000. Median assessed improvement value is about $326,000. Median land to total ratio is 54.5% on 3,603 parcels. Land value already exceeds improvement value, 55% of the residential stock. Most of it is not announcing this fact in the listing price. Alejandro has the buyer side read on what that means.
And that is the part people miss. Bernal does not look flashy enough to announce this about itself. It looks like a neighborhood where you buy a home, maybe fix the kitchen, and argue about paint colors. The data says something more expensive is happening. In a lot of Bernal, buyers are not just paying for the structure, they are paying for the position, the slope, the scarcity, the fact that there is not much room here for the neighborhood to become something else. That distinction changes how you underwrite the deal. A buyer arriving with a renovation budget and a price per square foot model may be solving the wrong problem. The more relevant question is what the site itself is worth, and how much of the purchase price is land premium versus improvement premium. The physical modesty is not an accident. It is how this type of market holds its value without advertising it. Andrew has the ratio data.
The strongest signal in the file is the price to assessed ratio distribution. Median confirmed sale closes at about 1.11 times assessed value. That sounds normal. The mean jumps to 3.65 times. That divergence tells you a smaller group of long-held properties is pulling the average sharply upward. More than half of confirmed sales sit between 0.8 and 1.2 times assessed value. That is what you expect when ownership has changed recently enough for the assessed basis to be relatively current. But 16.3% close above 4 times assessed value. That is where ownership vintage becomes structural and assessed value stops being a market proxy. Two individual examples from the file illustrate the range. One parcel sold for $3,785,000 against an assessed total just above $40,000. Another for $1,850,000 against a little above $33,000. Those are directional illustrations, not statistical findings, but they show the spread the data is working across. Alejandro has the ownership layer.
The surprise is not only that Bernal is old, it is that Bernal is old without being as owner-occupied as people assume. The homestead rate across residential records is only 48.4%. Single-family homes are higher at 53.9%. Condominiums drop to 43.1%. Multifamily drops to 29.9%. So this is not a pure owner-user neighborhood. There is enough non-homesteaded inventory here to affect pricing behavior, resale timing, and who actually shows up when something good hits the market. If you are running the Bernal numbers right now, tell us in the comments. Is the land value premium changing how you are sizing the deal? Or is it the ownership complexity that is shaping your calculus? We want to know how buyers are actually doing this math. Subscribe so you catch part 3 before you narrow your search, where we move from parcel structure to live market behavior. What is actually selling, what is stalling, and what that says about Bernal right now. Vladimir has the close.
Bernal Heights is not just a charming hillside neighborhood with older housing stock. It is a structurally constrained market where more than half of all residential parcels are already land value dominant, where a mean price to assessed ratio of 3.65 times tells you that ownership vintage is quietly running a separate market inside this one, and where a homestead rate of 48.4% means more investor and non-owner supply than the neighborhood's reputation suggests. These are the numbers that shape the deal before you ever walk through the door. Big Data Realty and our network of trusted local realtors work exactly this kind of analysis before a client ever writes an offer. If you want to talk through what these parcel level signals mean for your specific decision, reach out. We can dig into the data together. Big Data Realty, we run the numbers, you make the call.